Taking a look at some of the trending tickers right now, Roblox shares sinking into the red after reporting a wider than expected loss in its second quarter. The company reporting an earnings loss of 46 cents a share, while the street expected a loss of just about 41 cents. And Akiko, when you take a look at what's happening within the gaming market, certainly this post-pandemic environment much tougher than some analysts had initially anticipated. Gamers are being more selective in this high, sticky, inflationary environment that we've been talking about so much. But when it comes to Roblox's business here, we're seeing some of that concern reflected in the stock price today, with shares dropping. We're looking at the biggest drop that we've seen in just about 9 months. Daily users falling 1%, missing the street's expectations. So bringing up some questions about whether or not Roblox is going to eventually be able to meet its long-term goal of reaching 1 billion users.
Yeah, I mean, this is one of those pandemic darlings. And to your point, Seana, tough comps when you think about where the company was a year ago. You talked about average users seeing a drop. Their average bookings per daily active users also down about 3% year on year. And the company saying that the losses haven't necessarily, this hasn't necessarily stopped the bleeding. The company saying they expect to continue reporting losses for the foreseeable future. We talk so much, Seana, about Roblox being this big platform for younger users. It has been explosive, no doubt about that. But this is also a platform that's been also trying to expand beyond that, offering the more mature content from older users too. So as they try to expand that, the expenses are there as well. But investors really honing in on that user number. Certainly not good news when you consider a decline year on year. Well, shares of Nvidia are trading lower after running up about 195% year to date. This coming after Supermicro cited supply chain constraints for key components for its leading AI platforms. Now, worth noting, Supermicro has been collaborating with leading AI processor makers like Nvidia, and we saw shares, at least right now, down more than 4%. But, Citigroup at least coming out and saying that they think these supply concerns are a bit misguided, saying that Nvidia has made some of these prepayments to line up most of the high bandwidth memory industry capacity. They've been prioritizing the supply of chips. So while we got that from Supermicro, at least Citigroup saying that that's not necessarily something that applies to Nvidia. Regardless of that, shares down in a big way. Yeah, at least for right now, right? With Nvidia, with Citi, saying that Nvidia has made a lot of these prepayments when it comes to the lineup for the majority of those high bandwidth memory industry capacity that you were just talking about. But this also brings back an issue that has been plaguing the chip industry for quite some time during the pandemic. So we were quick to see any sort of concern about supply issues, what that could really potentially mean for these chip makers, clearly having an impact right away. Investors still a little bit jittery just about how that could so quickly impact a company like Nvidia. But Citi really coming back saying that this doesn't tell the whole story, not exactly accurate, doesn't paint the biggest or the full picture, tell the whole story just about what those supply numbers look like. And Citi saying, at least for now, it doesn't seem to be an issue with Nvidia. All right, let's take a look at shares of Rivian falling despite topping the street's expectations in the second quarter, raising its production guidance for the year. However, the upbeat quarter, not enough to boost the stock today. We're looking at losses of just about 8%. And Akiko, it's hard to make sense of this reaction that we're seeing in the stock today, because like I just said, it was better than expected results for the second quarter. They did raise their production target. Some on the street saying it wasn't as big of a raise as maybe they had anticipated. And remember, this is a stock that has performed well overall since the start of the year, with shares rallying just about 30% ahead of the results after the bell last night. Yeah, a smaller than expected loss, but still a lot of questions about profitability for the company. A lot of that has to do with what's happening in the EV space overall. More and more cars coming online. That means more competition for names like Rivian. And Seana, you pointed to trying to make sense of this move on the back of what was generally a positive report in their quarter. It feels like a bit of good news and bad news. You look at Piper Sandler boosting their price target from $14 to $22 a share, but still remaining neutral. You have Truist maintaining their price target, then keeping their rating unchanged. And then D.A. Davidson raising their price target, but also sort of maintaining their, sort of not necessarily upping their target in a significant way, saying they're just, a little concerned about the competition that is coming to the market, even though these analysts say they are generally positive on Rivian. So it feels like it's not necessarily a Rivian specific story. It just points to just what is happening in the EV space overall. But shares getting hit in a big way, down about 8.5% right now.